Silver has been among the commodities to go up sharply this year. Prices have flagged a bit lately. There you have it. Year to date, up around 8%, but dropping off the highs of early March. Okay, so where's this precious metal going? Often seen as the little sibling to gold as the Fed increase interest rates. We are joined now by Bill Baruch, President, Blue Line Futures. Bill, it's great to talk to you. Thanks for coming on the show again.
Thanks for having me on again. Always a pleasure to join you.
Is it possible to identify what drives silver? Is it mainly just that it shadows gold?
No, it is in the shadows. I mean, there are other drivers, but it is in the shadows. I do think, though, silver and gold do tend to work together. And something we highlight in our research for clients who actively trade with us, that silver and gold work best when they work together. So you have gold that may exceed some technical resistance, paint a path higher. Silver then, helps drag silver through its resistance, and they sort of jockey back and forth. So we like looking at both. We like looking at how they trade together. It is in the shadows. I won't deny that, but there are some industrial uses in silver that do keep it more of a barometer to the economy, where gold can really more capitalize as a safe haven at times.
Are you bullish on silver versus gold if you had to choose a trade right now, say with a time horizon of 1 year?
Right now, we're more bullish on gold. And really the main reason is we came into this year very bullish, and we were very unenthusiastic. Some people look at the autumn of the year as a seasonally bullish time of year. We don't tend to do that. We look at it as more as a volatile time of year for gold. So heading through that time, we were saying, look at gold as a big buying opportunity in December. We expect that buying opportunity to play out through 2022. And this had nothing to do with Russia and Ukraine. Obviously, Russia and China both were buying and stacking their gold reserves. And this was a catalyst for our bullish thesis. People follow Warren Buffett and what he's doing with stocks. Why not follow Russia and China, what they're doing with gold? Mm-hmm. But at the end of the day, gold bottoms and trades higher at the onset or early stages of a rate hike cycle. It did it 3 or 4 times in the 1970s when the Fed began and Volcker began hiking those rates very, very aggressively. Gold actually traded higher because when rates go higher, when Fed hikes rates, it starts to extrapolate out the slower growth to come. Mm-hmm. And we start to see, rate cuts actually being priced in at times at late 2023 and 2024. We find that to be bullish gold. Similarly, the U.S. dollar tops at the early stages of a hiking cycle. So, that's something I think is a very big catalyst as well. So I think there's a number of reasons out there looking at gold as being, some inflation narrative hedges but really it's the Fed and extrapolating out the slower growth. I think silver is going to follow along there. If silver can get above $30, you're going to see some massive technical buying that could take it to, out above 40 fairly quickly.
One favored way you have, if people want to take a bullish position in silver, is this ETF that tracks junior players, junior miners, SILG. It trades in New York. SILJ, I'm sorry. Yeah. Sorry, go ahead.
I like it as a barometer to play silver. I think just the mining space in general, a lot of these companies are marking, they're preparing for gold at $1,200, maybe as much as $1,400. That's how they're running their balance sheet, and similarly, parallel in silver. I think these companies are in a prime place to be making money for many years to come. I don't see gold really, if for some reason we had to go lower, I don't see it really going below where they're already marking their balance sheet. So these companies should stay profitable for a long time to come. The junior miners can tend to be a bit more volatile. And I think that is, this is a time where I think the mining space can catch up to some of the prices. So I think that there is some, it's a little more advantageous to be long the junior miners. However, Wheaton Metals, which is the old silver Wheaton, is really, that's not in the junior category. And that is a beautiful pennant building right now from that, the top being that March 2nd high and to the low just last week as it coils up pretty nicely, or the low earlier this week, actually. So I think that could be a space, a place to be. If silver really takes the next leg higher, Wheaton precious metals can really surge out of that consolidation pattern. But to broadly play it and avoid any idiosyncratic risk, any specific miner, SILJ would be a great place to be.
Let's have a look at Wheaton Precious Metals, WPM in Toronto, maybe a 5-year chart. And it's certainly, we're looking at a 1 year right now, Bill. Does that bring out the pattern that you're talking about?
Yeah,
or is it the
really
5
the
year?
patterns over the last 30 days. The surge through, I think it was March 2nd, and then we pulled back fairly sharply over that following week. And we consolidated within that range, a higher low earlier this week. And that bull pattern is consolidating right now and tightening up and sort of wedging, like that. So if we start breaking out above that, I think that could be very bullish and provide a very massive technical tailwind higher for that stock, as well as the miners in general.
Would you ever buy gold or silver bars, Bill? Is that your style at all?
Yeah, I own gold and silver bars. I mean, I think it's something to have. Now, it's my partners at Blue Line Futures both have gold and silver bars. Mm-hmm. I think it's something that should be in people's portfolio, broadly speaking. I'm as a wealth manager at Blue Line Capital, we do have an allocation set for metals, ranging from a 3% to as much as a 7% allocation in the mining and metals space. I think that it has a place in your portfolio. Now, you need a futures account for, the reason. If you start really stacking a lot of gold and silver, mm-hmm. and you build up a very large position of physical metals, and say silver rallies to $50 or even $75, and the dream comes true per se, you're not going to be able to go sell silver at your local dealer for $50 or $75 that day. That's why you need a futures account with us at Blue Line Futures, mm-hmm. and then you're able to hedge out by selling the futures contract, and then you can wait, so you can lock in your price if you ever want to capitalize on that, selling that physical metal.
There's an idea. Although, as well, you buying an equity or buying that ETF SILG would even be simpler than that. Yeah,
I mean, it would be a good. I think the metals. If we were to have an extreme move in mm-hmm. the physical, extreme move in the underlying, whether it's futures as well, the metals may not. I mean, the mining may not, have that extrapolation immediately, but it's something that I think you'll see in the coming weeks in the metals, in the mining stocks. But typically the mining stocks, for a real underlying fundamental move, mm-hmm. the mining stocks are known to be the leading indicator. So that's something I think, you want to pay attention to. And backing up the truck here, I described the reason why we came into 2022 extremely bullish on gold and silver because mm-hmm. of the Fed tightening cycle. This Russia-Ukraine scenario and the conflict has pulled forward some gains, and that's okay. So the volatility here we're okay with. I mean, if we trade down to 1830 or 1880 in gold, we are okay with that. You have to plan for the worst and hope for the best, because these gains they were pulled forward, but it doesn't change our underlying narrative, why we're bullish gold and silver to start with.